I can give a one-word answer to the state of the market right now, and that's from Clubber Lang in the Rocky movies, which is pain. It's ugly right now, especially the property market, and it's due to all the natural disasters and all of those things that we've been seeing: hurricanes, wildfires, floods, all of that stuff. The reinsurance companies are driving a lot of it because they have increased their pricing to all the frontline carriers, and it's still trying to settle out right now.
If you look at a snapshot from 2022, it's a year that produced 18 weather and climate disasters that exceeded the $1 billion mark. There was a drought, a flood, 11 severe storms, 3 tropical storms, 1 wildfire, and 1 winter storm. So the entire United States is experiencing this one way or another. And because of this, carriers are tightening their requirements. They're shrinking their appetites. You couple this with the recently finalized reinsurance treaties, and we're seeing a market hardening and some of the highest premiums we've seen since 9/11.
We've had over $1 trillion in losses over the last 7 years that have been paid out by insurance carriers. So naturally, rates are going to rise. The reinsurance, as Scott alluded to, with that 1/1 timetable set, it's just a combination of factors all hitting insurers at once. You used to be able to isolate it to coastal exposures or those within a catastrophic zone. Now you can't, as Matt alluded to, with all of these disasters occurring in all areas of the United States. It's just one big mess after the next.
I would add that it's not just pricing that's being affected, it's availability. There are insurance carriers leaving the market completely in the state of Florida. Other carriers are reducing the amount that they would be willing to offer in terms of limits. In fact, right now we're seeing the most a carrier willing to offer on a primary basis is $2.5 million. The days of one single insurance company insuring a $10 million property or a $20 million property, those are over right now. It now takes multiple companies in a layered approach or a shared approach of some type to handle just about any property of any size. And in addition to the capacity issue there, they're bumping up deductibles significantly. We have seen an increase, what was it, 2 or 3% deductible in terms of hurricane damage. And this is 2 or 3% of the values of the building, not the amount of the loss. And we're seeing just stricter terms all across the board. So it's tough.